Hello, everybody. It's Sunday. Another day, another market move, and things are beginning to move. The Bitcoin price is up nearly $7,500 from the bottom. If the $80,000 level was the bottom, we have a whole bunch of theories as to why the market crash did happen, and they are not what you expect. Check out the most recent post on Patreon. But let's get into today's video. There's a lot of secret investing lessons in here that are good to talk about during these times. And we'll talk about covered calls and IBIT and Bitcoin and leverage and leaps and rolling up, rolling down. We'll talk about the magic to AI and AltSeason, bear markets, and so much more. So this one's called Leverage or Legacy, What to Do. And a big thank you to the mods in the chat for being here. And disclaimer, not financial advice, just a guy on the internet. All the questions come from Patreon. First question is, let me zoom in. Mataru, since Tesla Leaps are too expensive to purchase right now, have you considered buying IBIT Leaps since they seem reasonable right now and can give us leverage exposure to Bitcoin? And we think that the price of Bitcoin will go up over the next 12 to 18 months. Interesting one. First of all, I'm just going to say Bitcoin is Bitcoin, and we've seen kind of what has happened. But do not be mistaken at all about the price of IBIT Leaps, and do not be tricked. So if you look at this, this is the action, the most active leaps for IBIT on Friday. And if you look at, for example, the June 16th, 2028, $45 strike, the price is pretty much $45 now. The cost is $20. So you need Bitcoin to make a 43% move from where it is today to break even. I would not call that cheap by no stretch of the imagination, not at all. So they're not cheap. And especially during volatile times when stocks are volatile, Bitcoin's been incredibly volatile. Options are very expensive. You got to wait for quiet times or extreme dips. You know, maybe if Bitcoin was at 80K, have a look at some of these. The price of IBIT would have been around low 40s at that stage, but they are not cheap. And no, I'm not looking at IBIT Leap options. Not at all right now. The crypto bags are packed a long time ago, everybody. Then the whole of this year was focused on rotation into AI. That's been the game plan since 2022, 2023. And there's been very little, if any, buying of crypto right now, other than a little bit of speculative trades around the edge, a little bit of perping, and that's it. So I hope that helps. Next question is from Patreon Cappy. Following you since day one. Wow, Q1 2020. I wasn't even around in Q1 2020, but maybe Q1 2021. Yes, I was. My first video, I think, was in Q3 2020. Anyway, I followed your advice and got my whole Bitcoin. Great, thank you. Now I feel I could A, change it entirely for IBIT and cover calling it perpetually, or B, change it to BTCI and get the dividend. What's your view? I don't want to get rid of pure form, but I feel I am losing an opportunity of covered calls for extra money. Thanks and big hugs from Malaga, Spain. Haha. T&D, you have a neighbor. Not far. So let's talk about this and break it down. I like the way you're thinking. Covered calls are magical. I'm going to talk about the advantages of covered calls first across these two vehicles real quick, and then talk about some other stuff too. But yes, you can generate steady income. You got to have a process to know exactly when to sell the call. And BTCI offers high automated monthly yield as well. IBIT has the DIY call writing, which I think would be better than BTCI because of fees. And Bitcoin volatility means option premiums are fat, like we just discussed in the previous question. And you have your Bitcoin exposure and you're adding yield, which is good. You can also monetize sideways markets and reduce opportunity cost of your bag. But what we've recently seen is extreme volatility in Bitcoin by things that are out of our control. This has been a very unusual thing, and I think we've got the finger on the pulse as to why it actually went down. And now all the other players and market manipulators are layering into this, just like what happens in markets. But anyway, check out that Patreon post earlier. But this is the cons of the covered calls. First of all, beware of EU regulations and taxing things like unrealized capital gains on Bitcoin. I know they're talking about it. I don't know if they're going to do it. I don't know what the law is in your country, but be careful of things like taxes or even, heaven forbid, confiscation. So it's good to have your go bag. I always talk about a go bag where you got a piece of Bitcoin hidden away somewhere nobody knows about. And if things really do go to hell in the handbasket, grab it and go. That's your go bag, okay? Bitcoin go bag. That's the advantage of Bitcoin too. Your upside with these calls, covered calls, could be capped during strong Bitcoin rallies. We saw Bitcoin go from 126K and down to $80,000 in less than 40 days. Huge, huge move. $46,000 swing. Never happened in that level of dollars in such a short window of time. So it was very violent. And people like Tom Lee believe it could be equally as violent back to the upside if the selling out of you-know-where stops. We don't know. Watch for the fees, especially with BTCI and the tracking error that can eat you alive. And also tax. I don't know what your situation is with tax there in Spain, but be careful of that too. And you got to keep your finger on the pulse for ongoing call rolling as well, which is not trivial. But don't forget, don't give up the go bag. So if you are good at options, if you're good at covered calls, definitely maybe take half your Bitcoin and do it. But be prepared to get called out if things go spiking. And that's the danger as well. Look for very special times to do that, like big multiple standard deviation mean reversion spikes to the upside, then sell a call. And we'll talk now about the importance of fat pitches. Shout out to Charlie Munger, may he rest in peace, because that's the term he used to talk about as well. And that's when you actually sell your calls. So this question next is very important. The excitement, well, hi James from Seamarsh. I'm new to trading and recently started using the IATR model. I'm paper trading and have to say I'm having a blast. Good stuff. Thank you for such a great product for a noob like me. The excitement of the results and the movement of the market has stirred me to desire more trades. How do I get more buy and sell alerts so I can trade more often? I've grown an addiction to looking at charts and would like more frequent buy and sell alerts. Second question, when observing the backtest displays in some of your YouTube videos, I've noticed a low number of buys and sells, mine are high. Does this mean I'm setting the anchor too far back, and does this matter? So for the last part first, which is easier, you got to set the anchor back to what is the new trading range. So for example, if you're looking at Bitcoin, you go all the way back to the end of the bear market, which would be around November 2022. Or is it? Yeah, the end of the bear market. That's when things start rebounding. And then Tesla would be going back about 3 years and it fell to 106. That'd be the range you look at, because you don't want the chop of what happened in the past in there. Now, there's a couple of things I do want to stress. This is important. And I think it was Charlie Munger that said it. Maybe he learned it from Warren Buffett. I don't know. They both shared everything. But be patient and wait for the fat pitches. And Charlie or Warren had this concept of a punch card with 20 punches on it. And every financial decision you make, you use up one punch. And that would, imagine this over a lifetime. Now, a little anecdotal story from me. When I used to work, I used to have this concept. You got this kind of 3 rocks in your pocket. If you're in an hour-long meeting, you're only going to say 3 things. Okay, but when you do say something, you make sure it's very profound. It's like you're hitting the ball out of the park. So save your ammo. Don't fill the room with hot air, but be very selective in when you do say something. And each time you say something, you move one of those rocks from one pocket into the other. So kind of funny. I can imagine the jokes now. You're walking around with 3 big rocks in your pocket. No, there can be small marbles or something, or I don't know, crumbs of potato chips, whatever you want. Little piece of paper, but that's the key here. Over a lifetime, if you imagine you're going to have maybe maximum 20 huge opportunities, maybe not even that. If you're trading for 35, 45 years, that translates to one good pitch every 2 years. Think about that, because they are the ones that really count and really make it work. And as Warren here says, You would think a long time before every investment decision. You would make good ones and you'd make big ones. And that's so important. And the ATR is designed for longer time frames, like the 12-hour chart, the daily chart, where you can see your swings. And when I talk about swings, I'm going to show you here. This is Bitcoin on the ATR, and then I'll show you the settings of this. You'll see the big swings on this chart going over time. You'd have a buy signal in August 2024, and another buy signal in April 2024, and another buy signal right now. But then the sell signals, you'd have a sell signal December 2024, sell signal July 2025, etc. Follow the chart. And another interesting thing here is every time you see the dips here below the red line, the 200-day moving average, they are rare, but the one we're in right now is extraordinarily deep. We've made a huge deviation from the 200-day moving average, falling to 80K, and the 200-day moving average is about $110,000 as we speak. So that's a big swing below. It normally doesn't fall that far below. So that would be an example of a fat pitch. The settings, by the way, on this, pop them up, settings on ATR. And over the last year or two, go back in time. This anchor date is going back to 2020. The start date for the trades goes back to 2022, 12/12. That's the beginning of the bull market, if there even was a bull market. But watch the signal logic here for Bitcoin. It's deviation. Deviation, not trend. Now, let's look at another example. Tesla on the ATR. Very clear signals. And remember, if you have the trend going up, you stay in the trade. You might see 3 sell signals, November 2024, mid-November 2024, and then at that big spike up at the top, boom, that's when you hopefully can get out like 480, 485. That was a new all-time high that was made after the US election. And then you go down, you look at your buy signals. You got your buy signals down around 160. We had a lot of fun buying at 160, 150, 140 in mid-2024. And then it rolled up, and then it fell down again during the April tariff tantrums. And we had more opportunities at 200, 220, which were wonderful. And then you get your sell signals again. Right now, we're in the selling zone. So the point is, the settings for Tesla, by the way, as you're using it, this is trend. And again, anchor date, start date, the same as we had for Bitcoin, going back to the 106 level. But the key here is really don't try over trade. Be very patient when you actually make your move. Wait for those fat pitches because they can determine everything. So when you invest, especially if you're new to investing, be patient, sit on your hands, wait for the opportune times. Be super, super patient. Patience is the superpower in investing. There will always be an opportunity. There'll always be a time for one of those big fat pitches. And think about your lifetime. 20 big trades. But make sure you wait for the right asset to fall into the right trap at the right level. Absolutely key. Next is from Crypto Recon. Thank you for what you do for us, James. I'm a 57-year-old trying to make up for earlier mistakes in life and lots of lost time. My son and I have each 4x'd our portfolios by following your non-financial advice since January 2023. Nice job, and are deeply grateful. I recently rolled up 16 Tesla Leaps with 300 strike expiring January 2027 to 20 Tesla Leaps with 450 strike expiring January 2028. My profits from rolling, my effective cost basis for new position is $69. I'm obviously long-term bullish, but my question is, would it be better to continue rolling up my position as time goes on to remain leveraged, or wait to expiration and purchase as many shares as possible? I may sell half the leap sometime between Jan and April 2027 before that theta really accelerates decay, and save the dollars to exercise the remaining leaps at the 450 strike at expiration in January 2028. And then strategically sell puts calls against the shares using mean reversion. Am I lost in the sauce? I'll be very, very blunt with you here. I know what you're doing. You're trying to increase the number of leaps you have by rolling up, but you're rolling up out of the money. And I think it was last week we covered the CAGR that's required for leaps to get your optimal return. And when you buy out of the money, you're basically toasting yourself. You can see here the 700 strike leap was the worst, and the best one was actually in the money. At the time, Tesla was $450. Now it's about 400 as we speak. So I did share that model on Patreon. Check it out. Run your numbers. But also, don't roll up too much. There are people that make too many mistakes. They've got extremely heavy leverage, and they got so much leaps, they actually don't have any equity to buy them. So I've got a truckload of 140 strike leaps converting in January 16th, I think, next year, which is 2 months away. So I need to amass a lot of cash to be able to convert those to my mattress. And if you know me, you know about my mattress. So let's talk about the pros and the cons of rolling first, and then I'll talk to you what you should do or what I would do. I don't give financial advice, of course. So your leaps give you much more control over more shares. You've moved your bag from 16 leaps up to 20, which is 1,600 shares to 2,000 shares, which is a super nice bag. There is slower time decay with leaps. That's good. And there's no need for huge cash outlays to exercise rollovers. But there is one thing I do want to mention regarding theta and time decay. When your leap goes deep in the money, there is no time value. It's all intrinsic value. So like my 140s trade basically at the stock price. If the price is 400 and the strike is 140, the leap will be 260. There'll be no time value in there at all. None. So don't worry about the theta decay. When you buy at bottoms and you go in the money, okay, that's the first piece of magic. Make sure you got margin in your account. Now, the cons of rolling, what I don't like about rolling is, yeah, you got your ongoing time decay risk, but it's not too bad once you go deep in the money. You got no voting rights. Recently, that was important. You're higher risk if you're wrong on direction. Losses can be 100% of premium. And this is a big part of the rules of leaps and leverage, because leaps are a form of leverage. And leaps can be very expensive if you time it wrong. And you also get hammered on taxes. These are so important here. So for example, I remember buying like a lot of my initial bag for Tesla in 2017, 2019, a lot of leaps. They translate to like $15 strike price right now, sometimes $16, sometimes $17. And the point is, I have never paid tax on those leaps I've purchased, but they've become a huge mattress. And I use that mattress to sell calls against and sell puts against. Okay. Money is in the selling. Remember that. Money is not in the buying. Don't do too much buying. You're going to get hammered. So if you learn anything today, leverage, buying, bad. Now, my playbook is simple. Buy leaps at extreme bottoms. Wait. And what I mean by wait is wait for a couple of years. Convert into stock, no tax penalty, which is very important for me because I have to pay a lot of taxes. And roll that new equity bag into the mattress and then use that to sell puts and calls. Okay, so don't stop rolling up and don't be all leaps. Also, the golden rule, never be more than 50-50 leaps in equity. Very important. You need that equity bag to be able to convert the leaps, but don't go crazy. You only go crazy on leaps when Tesla's super cheap. And then most important for everybody, this applies to crypto and perping and everything else, is leverage is dangerous. I was made using leverage, but I know how to manage risk. Hopefully most of the time. If you are doing something risky, make sure it's a tiny percentage of your bag, like 0.5% or 1%. So if it blows up, you still have 99% or 99.5%. Remember that too. But leverage, if you're all leverage, a small mistake can turn into a catastrophic loss. At 57 years of age, you can't take that. Okay? Without leverage, mistakes are survivable. What I mean by that is when you convert your Tesla leaps to stock, you got your mattress. And with that mattress, you can ride any storm. If something bad happened to Tesla and it was down for 2 years straight, and we did see that recently, your leaps could all expire and all of your value, all of your wealth could disappear. That is the example of the danger as well. And also, you've made money with your leaps. You got in early. You followed a lot of the trades probably. But that can feed overconfidence and now you just want to roll forever. But that could be the silent killer of wealth because you keep rolling and you never have anything to show for it. So if we did go through a nasty period where you had, say, 450 call strike leaps or 500s or whatever, and the price stayed under that for 2 years, all your wealth evaporates. That's the danger. You want to build your mattress. You want to hold your equity, okay? Because that compounding is the miracle of growing wealth. Like I posted something as well this morning about, I think it was Costco and what it's done over the past 20 years versus Disney, which has done nothing. But compounding only works if you stay in the game, stay alive. At 57, your job is to stay alive, stay healthy, stay in the game. Don't risk, de-risk at this level, okay? So I hope that helps. And another cool chart to really emphasize what I'm saying is all these people here, this is the share of U.S. household equities held by people 70 years and above has doubled since 1990. You know why? Because many of them are sitting on stock and have been for years. And the miracle of compounding is making them richer and richer. And now these 70-plus-year-olds now hold nearly 40% of all U.S. equities. I want you to be like that too, okay? Very important. You okay? Dog is whistling. I gave her a chewy toy. I hope she's not choking on it. Anyway, more distraction, live TV. I got to get a table back up here where she can sit and watch us as we go live. So again, build your mattress, hold your winners, ride the storms. Don't get cute. There are people that capitulated when Bitcoin fell to $80,000. They said, oh, my stop loss hit. I sold. Yeah, now it's $88,000. Okay. You know, and there's people say they were very cute. Oh, yeah, I took profits. And guess what? They didn't buy back in. And now probably they're losing money. So don't get too cute. Build your mattress. Have that safety cushion. Let the miracle of compound work. Be these 70-year-olds. Okay? That's how you get rich. You get rich slowly. Let the miracle of compounding work. I hope I didn't repeat that enough, but this is so important for everybody, especially the young kids here. If there's somebody 22 years of age watching the show and they have 100 shares of Tesla, literally all they have to do is sit on that 100 shares of Tesla. By the time they're 30, 35, they'll be extremely wealthy compared to their peer group. Extremely. Okay? That's the game we're playing. It's a zero-sum game. It's you against everybody else, not you against the market. Remember that. He who dies with the most toys wins. I did warn you, lots of investing rules here today. Anywho, from Tijo John, hope I got that right. Due to the relative strength of Tesla, I'm now allocated over 50% Tesla. If Tesla 10x's into 2030, 32, and it continues to outperform our other holdings, that relative allocation will increase. I don't want to sell my Tesla, but also want to be smart with allocations. Any thoughts on this? NFA, thanks for all you do. And this community has been life-changing, and now I am more stable positioned to take care of my kids. I love this. So, first problem, don't sweat being 50% Tesla, because you know exactly my Tesla allocation right now. I've spent the last 2+ years stacking, rotating, stacking to get to exactly where you are right now, because I believe it's the best risk reward. Now, if Tesla does 10x over the future, it is possible your bag will grow, where you could be 70 to 80% Tesla. And that's okay. If we do go on an extreme rampage, all right, imagine Tesla fires, some people are predicting it could hit $2,000 next year. If robotaxi really takes over the world and they start launching in multiple countries and start scaling rapidly and every car they make gets kicked into a fleet, then we could see crazy numbers. And 2027 will also be completely nuts. If you see a situation where you get extreme concentration, like 75, 80% Tesla, then take some off the top and we rotate into something that's super cheap. Okay, that could be, heaven forbid, that could be a beaten down crypto name, or it could be a brand new semiconductor maker, which is also called Tesla. We'll get to that in a second too. So don't sweat that problem at all. That's a good problem to have. And there were a lot of legendary investors that have had huge portfolio concentrations. Okay, we're talking the Warren Buffetts, the Bill Millers, and I'll talk about Bill Miller specifically because there's a lot of learnings in this case about portfolio concentrations. And Bill Miller is a legend. I've known of him. I met him briefly on the sidewalk once. He worked at a Legg Mason Value Trust Fund, if I recall, and he outperformed the S&P 500 for 15 years straight. And that's something that nobody else has done. Okay. And his method was high concentration in kind of few assets. And his personal allocation up until recently, he was 50% Amazon, and he got into Amazon shortly after the IPO. I think his cost base was around $6. And that $6 buy-in made him 50% of his entire net worth was Amazon. And he put his other 50% into Bitcoin. Okay. He was a legend. A legend. And talk about portfolio concentration. 100% of your wealth in two things. Very interesting. But this is the important lesson, everybody. Even legends, somebody who breaks the record, beats the S&P 500 15 years straight. Guess what? This is like a soap opera. It's a brilliant story. But I follow all the legends. All their good, all their bad, all their rules. Just like I was obsessed with Albert Einstein and Leonardo da Vinci as a kid. Now Elon Musk. You know, follow the clever people. Follow the good capital allocators. But this is something we can all learn, all right? This guy, Bill Miller. Tesla is the one thing that even legends can't decode. Okay, genius investor decides to go short Tesla between $110 and $113 in January 2023, and he said it live on CNBC January 6th, 2023. You can go back and look at the price there. We hit 106 a few days earlier, and he planned to short more on any rally because he didn't understand the market valuation of a car company. He said car business is bad business. He said there's competition coming from BYD, and he saw car businesses being very low returns. And guess what? This thing ripped from 113 to $300 in like 20 weeks. Okay. And that hurt him a lot. The short sellers of Tesla have lost, I think in that year, about $12 billion. I don't know how much exactly Bill Miller lost, but they got taken to the cleaners, just like Bill Gates. Shorted Tesla for 8 years. He got, as SMR would say, it's too rude to say, but he got financially badly done, let's just say. So this is what's incredible. Genius investor doing everything right at the end of his career decides, hey, you know what? Tesla doesn't make any sense. And if you don't understand something, okay, don't invest in it, number one. And number two, if you don't understand something, definitely don't short it. Very important, because that type of confidence can really, really mess you up. This is the key rule here as well. Arrogance and ignorance, they will bring about financial suicide. Stay humble. Don't think you know everything. Only invest in what you know and understand. And as I said years ago as well, there's very few handful of people that understand both Bitcoin and Tesla. They're both complex. So you got some people who understand Bitcoin, some people who understand Tesla. Very few understand both. But now we're seeing a big turning. I've been talking about these two for 5 years. But now we see a turning where a lot of people are investing into Tesla too. That may be Bitcoin maxis. And even Bitcoin maxis are diversifying into Tesla too. So I hope you all got something from that. But that's so important. Imagine being a legend your entire life, breaking all the records, and then, hell, I'm going to go short Tesla. Nope. Bad idea. Next, from Logan E. Greetings, James and I team. Older altcoins appear to accumulate crypto tech debt. Invested VC tokens, regulatory baggage, narrative fatigue, government bloat, sheer market cap size, causing their cycle over cycle ROI to decay sharply compared to newer projects. I'm starting to believe traditional all season are a thing of the past. What are your thoughts? I love this because it's a very smart question and it's a very astute observation. So kudos to you. Let's look at a couple of things. And, one of my predictions for 2025 was that rationality would enter the crypto sphere. I got that wrong. Remember, all of my predictions for this year are all quant-based, so they're easily proven right or wrong. But let's look at some nutty stuff that's happening. This is the market cap over daily transactions for some of the top chains out there. And you can see Ethereum has over $250,000 of market cap per transaction, which is nuts. XRP, 86,000. Cardano used to be the highest, but they stopped reporting data because the chain is down, broken, forked, I don't know what. You got Solana, $1,000 a transaction. Very different. Another view of basic statistics is market cap over daily users. XRP has nearly $11 million of market cap per daily user. Think of Meta with Facebook and Instagram and all that stuff that I don't use. They trade at about $100 of market cap per user. And you got XRP, nearly 11 million. It's like, doesn't make any sense. Completely illogical. But that's crypto. ETH is $827,000 per user. Also completely ridiculous. But they're going to say, well, the L2s do all the lifting. Yes, and they do all the revenue generation for themselves. So again, I called Cardano a scam back in March 2021. And now I'm seeing the same type of stuff happening. Let's speak about that for a second. Let's look at Cardano, because this supports your thesis. Cardano was 43 cents in January 2021. All right. Now it's 40 cents. And then people say, oh, Solana's also bad. When you can do the same chart, you do Sol over Cardano, Solana beat it by 2,600%. Okay, so you made money on Solana. I know we haven't had a bull market so far, or maybe ever, but it's kind of crazy. Well, why I agree with you. A couple of quick points. Yes, you're right with all these vested tokens and the cashing out and profit taking. And then you got your fatigue. You know, people like Charles Hoskinson can only say the same thing so many times. I think he's actually given up with the hype story. Now he's talking more about Bitcoin. Kind of wild, the ETH killer. And then the governance bloat. This is so important. You know, a lot of chains, they pride themselves on all of their governance. But the point is, there's so much governance, they can't even make any decisions to make anything work or fix anything. So it's too inefficient with too many shareholders. And the sheer market size cap is a fallacy. Billions of tokens, even times 40 cents, is billions and billions of billions of dollars. It's ridiculous. So that's a big problem. And also, I want to talk about one thing that's so important. You're dead right as well. Okay, everything, I violently agree with you on every point you've made in your question. Alt season and the alt bear market. Yes, there is always an alt season to be had. There's always an asset going up. There's always something making money. And the alt season this year, you could sum it up in Zcash and hype. That was it. Everything else bled, pretty much. You could also argue, this is an interesting point as well, that alts have been in a bear market for the last year. Not only did we not get an alt season, we haven't had a bull market for alts. They've been down only for the whole year. This is everything excluding stablecoins, ETH, and Bitcoin. And it's down 40% over the last 12 months. It's done nothing but lose money. And this is all happening at the same time that adoption is going through the roof. The profits, the top 5 dApps on Solana all make more money than Ethereum. And they're just dApps, making money, more money than the biggest L1 in the world. Everything in crypto is absolutely irrational. That's why it's much easier to make money on equities, especially with options. So I agree with you violently. Thank you for the great question. And sorry for being a little bit passionate today. Hope it's okay. And we got the Hobbit 44. Good to see you again, buddy. Thanks for staying with us even after your 5-year graduation. Yes, I did say I'd make videos daily for 5 years. That ended, I said, either at the top of the bull market or after 5 years, I'd stop doing 7 days. I'd take Saturdays off to let my arm repair and stuff like that. And here we are. And unfortunately, the 5-year period and the top of the bull market also happened at the same time. Weird, you can't make that stuff up. But good observation. Can you shed light on the Tesla AI5 chip being a direct competitor to NVIDIA's GB200 and H200, etc.? I wonder if the AI5 architecture can be used widely for AI infrastructure like NVIDIA's processors, or if the AI5 is optimized for FSD and Optimus to an extent that is less competitive for broad-based sales. If a direct competitor, Tesla would be more energy efficient and give NVIDIA some serious competition. What does that mean for us? I love this question. This question is so deep. It's actually going to become a dedicated video. But let me give you a teaser first as to how things work. And I love the way you think, okay, because this is critical and timely all at the same time. First of all, AI inference, okay? This is huge. AI inference will be 1,000x bigger. Stop it. So go get, stop. Will be 1,000x bigger than training. Live TV is always fun. This is so huge. Think of AI inference token generation. It surged tenfold in just 1 year. And now AI agents are going to become mainstream and they're going to blow everything out of the water. Okay, so forget LLM training and GPUs for training. That does not matter. You only train once, but you have to make 1 million decisions a day. This is why inference is everything and so important. And so few people realize this. They say GPU is everything. Stop it. She's so bad. Training happens once. Inference happens millions of times per day. In real world, you drive in a Tesla FSD robot, it's making all these decisions all the time. And ongoing inference dominates cost, energy, and safety requirements. This is a huge story. And the other thing that's very important, milliseconds and watts matter. Now, the stretch is, can these AI5, AI6 chips do what's required to make things work in the real world across other applications? This is where it gets really interesting. And this is what we'll get to the bottom of in a dedicated video. But I do want to share one thing as well that was said today. Elon Musk posted a few hours ago. Most people don't know that Tesla has an advanced AI chip business and board engineering team for many years. The team has consolidated. Okay, what's special about this consolidation? They got rid of Dojo and are focusing on their AI5, AI6, AI7, AI8 series. AI4s are running in the cars. I have one outside here as I speak. That's going to be a game changer. They're designed to make millisecond decisions by themselves without going back to a data center or anything else. Everything is happening at the edge. Okay, and this is where the real value of the planet is. Jensen Huang said it himself. All the money is at the edge, and it's all in inference, not in training. This is why you could have Tesla becoming more important than NVIDIA, more market cap. We already have a roadmap to $8.5, $9 trillion market cap, which is the biggest company on the planet by far. But this is where it gets really wild, okay? We've heard Elon Musk spends his whole Saturday planning chip design. He walks the factory of Samsung in Texas now, where they're building AI5s. He said the current version of car is AI4, and we are close to tapping out an AI5 and are starting work on AI6. And this new AI chip design will happen in volumes, brand new versions every 12 months, and we expect to build chips at higher volumes ultimately than all other AI chip companies combined. Read that sentence again. I'm not kidding. Tesla will be the biggest consumer of chips on the planet. They'll be going in all the robots. Cars are robots. They'll be going in Optimus. They'll be going in data centers. They'll be going up to space. And there'll be solar, 100 gigawatts of data center driven by AI5, AI6. They say AI8 will be the real space chip as well. This is why it requires a dedicated video. You're on the money, Hobbit. It's a big one, and it could be huge. And it is not priced into the Tesla stock. Completely wild. But you're in early, so that's all that matters. This is why you don't want to sell your Tesla. It becomes a very tight hodl bag. Build your mattress. The results of Tesla alone are good enough. You don't need leverage. Going back to our friend earlier, 57-year-old friend. Next question is for my kids. Hi, James. Really appreciate everything you do and the team do. I've built up around 500 Sol, half of Bitcoin, 140 shares of Tesla, 60 shares of MicroStrategy, and 2 deep in the money NVIDIA LEAPs. Woohoo, grab back in May. You went shopping in April, May, $88. Nice work. Sharing amounts because I feel it's important. You talk a lot about the opportunity cost, but my wife really wants us to buy a rental property this year. Because of taxes, we pretty much have to sell about half our Tesla bag to make the down payment. How would you explain to somebody who doesn't really think about opportunity cost about what we might be giving up by selling Tesla now? By the way, I do want to say one thing. I have this old expression, the family that invests together stays together. So you're both doing that, which is cool. The other thing is, well, it's good to have that balance, the yin and the yang of females tend to be very conservative with finances. Men tend to be more aggressive, but the balance can be a winning combo. So I like the way you're thinking. But this is not the time for that. Let's talk about your bags first. A couple of quick comments. You're too heavy, Sol. You're too heavy, NVIDIA. But hold it, you got it cheap. It's a leap, so you're fine. Your Tesla is probably worth about $54,000 by my calculations. And to sell, oh, by the way, most importantly as well, the one chart that you need to think about with your wife is this chart. All right, you've got, I did a video 3 years ago now, 8 ways to $8,000 with Tesla. As usual, people said I was a psychopath, a nut job, crazy. Go check out over the last few months how many videos there are of Tesla going to $10,000, $12,000. By 2030, mine was 2032, $8,000. This is the new sandbag version based on the comp plan. And you can see here, we could easily, not promising anything, but we could easily be at 12K by 2032. And that's a lot higher. That's 50% higher than my original $8,000 from 3 years ago. Because now we've got a roadmap to performance. And just think about the chip business alone I just covered. If they pull that off and become the biggest chip maker on the planet, their combined market cap alone from the semiconductor business would be worth more than NVIDIA, which in the future, that could be $5, $6, $8 trillion alone, which takes us to some of these prices here. It's all laid out. All the components are there. Nothing can touch it. So if you go back to this, you have to sell 70 shares to get your down payment on your holiday home. In the future, if Tesla does go to 12,000 in the future, that would be an $840,000 opportunity cost. That's what you say to your wife over the dinner table. Give her a glass of wine, soften her up, and then share this chart. Now, the question is, what will your holiday home be worth in 5 to 7 years? The answer is not much. Holiday homes don't appreciate very much. Unless they're in primo locations, like consider a very luxurious, exclusive beach or something. But I don't think you're buying one of those, given your budget. So, hold. I know what she's thinking. And let's meet in the middle here. I do believe we could hit $2,000 pretty fast within, say, 2 years, maybe 3 years. If that does happen, then you only have to sell a tiny amount of your shares to make your down payment. You still have the bulk of them. So that's what I would say. Not financial advice. You guys figure it out. Next question is Hunter Hunt's Harrenhal. What do you know about the cycle theory? Theory says next fall would be the lows of the 4-year cycles. I'm new to investing and the stock market. I don't want to buy at all-time highs because I know entries are everything. Should I just add what my budget allows to my Roth IRA with the intention of buying into stocks? I believe in at the bottom of the bear market. Thanks for what you do. So this is interesting. I don't want to talk about, forget big cycles. These people have things like 18-year cycles, 21-year cycles, 4-year cycles. All that cycle stuff is nonsense because there's always a bull market somewhere and there's always a bear market somewhere. Like there's always a recession somewhere. There's always a boom somewhere. Right now we got an AI boom. We have a commercial real estate recession, retail recession, residential real estate recession, manufacturing recession, tons of that stuff. So I want you to think in terms of specifically by assets. So for example, if you look here, everything is split and different. Forget cycles. Throw them out the window. Crypto, we technically had an altcoin bear market for the last year. That's already happened. Stocks, most are in a bear market for years. That's not good. Okay. And I'll show you a chart that signifies that. The stock market has been carried by AI and the Mag 7. And AI is going through mean reversion right now. Okay. So AI got a bit too frothy, a bit over its skis, and now it's beginning to come back down to earth, and that's when we buy. Okay, so let's have a look at a couple of things. One, this shows you how the Mag 7 carries the entire S&P 500, okay, 7 stocks, and then there's 493 stocks. 7 stocks now make up 38%, call it 40% of the S&P 500 market cap. This is the most historically concentrated it's ever been. Okay, this is because of AI. That's it. AI is carrying the market. The rest, you could argue, is in a bear market. And also the S&P 500, I still say that 60% of those companies could be dead or they're zombies by the year 2030. AI is going to disrupt everything. So don't think about cycles. Think about understanding what you want to own, what narratives you want to be on top of, and the layers at which you want to get in. And remember, Q1 always sucks. So that's when I'm waiting to go shop. I also need to convert a lot of leaps into equity. So I got a lot of work to do. And I need cash for that. So watch what I do. Anyway, Brimple Pimple, love your work. Wondering what's going with Japan, the Nikkei, and whether anything to watch out there. Understand the new female prime minister may have certain ways of thinking. Seems their GDP per capita is collapsing too, thanks in no small part to Tesla, I expect. So let's have a quick look at Japan. And, you know, just like this is gonna hurt some feelings, but I'm not here to sugarcoat anything. I just share data. Disruption is happening at scale. AI is the biggest thing to ever hit this planet. It's the biggest industrial revolution by far. And there's 2 leaders. China, USA. That's it. The other countries and economies will be wildly disrupted. We're already seeing some of that happen right now. Think German car industry. Now, the reason Japan is weak is not because, you know, just their car industry, there's other factors too, but this is GDP per person employed, which is crazy. Luxembourg, the winner, tiny country, lots of financial services, do very well. Norway, lots of energy, lots of oil. United States just leapfrogged Switzerland for the first time as far as I can remember. Apologies for that. The dog is going crazy. But if you look down the list, you see Germany is now below France, and France has its own set of problems. And Japan is third last, about to be overtaken by Russia. And of course, China. But it's very ugly. But why is Japan and the world hurt? Well, their monetary mess has been a disaster for decades. Okay, they print too much and they try to control the yield curve. It's horrible. Then their aging population, 1 child, 1.2 child per woman, far below replacement levels. Aging population, shrinking workforce, stuck in the old ways of doing things, very high social welfare costs, just a complete disaster. Heavy reliance on imports. It's a very resource scarce nation. They have to also import all its energy. And remember as well, I've said many times, GDP per capita is tied directly to the amount of energy a land has. And finally, the industrial base has been eroded by competition from South Korea, China, and others. Now, given all that, Japan is very good at robots, and maybe they could find a way to re-industrialize their nation with the world's best robots. Maybe they should spend some time with Elon Musk and Optimus. So that's the situation with Japan. But it's not going to be isolated to Japan because other countries will be hit as well because of this new industrial revolution. Buckle up, folks. AI. And happiest time of the week? Happy Doggo in Thailand is making a huge difference to dogs in the street. A lot of wild dogs in many countries like that. But they give them fresh and healthy food, cooked daily, and served to over 800 dogs. And they've also sterilized over 50,000 dogs. Dogs that can't make it on the street are adopted out to folks in Thailand or abroad. And it's funny, if you ever meet these wild dogs in places like Mexico, I remember I used to go to Bulgaria. They're all loving and sweet in Thailand. So well done to those guys. And DCA tomorrow, it will be a very interesting show. I know last week, a lot of people were a little upset. We're going to make it better this week. Okay. Last week, when people lose money, nobody's happy. All right. I know that. But it doesn't mean you shouldn't stay focused on what's happening. Billions are made in the bear. Is this a bear? That's the $1 billion question. I hope you all got smart. I'm going to do some live questions now. And thank you to the wonderful moderators in the chat too. And there was a lot in this video today. I hope people were able to absorb a lot of it. A lot of key investing lessons too. Doc Intern, your NFA, on which deep in the money leaps out to January 2028 or better, IBIT or MicroStrategy. Oh, this is a good one, Doc Intern. So there's so much. I mean, I've been in MicroStrategy since September 2020. All right. And I've seen everything, but I've never seen the level of FUD we're at right now. It's as if everybody wants to impale Michael Saylor, put him on a spike, and burn him in the town square. It's just unbelievable. But that's exactly what happens when people lose money. Okay, it's gone from being the most successful stock since 2020 to the most hated stock today. And the big players and the FUD machine and TV and all the haters aren't letting up. The FUD machine is up to 90. You got JP Morgan now saying this, and removal from MCSI. That is a theoretical possibility, removal from the MCSI index, but it'll be by no means catastrophic because the allocation to MicroStrategy is very small. Okay, but the MCSI is supposed to represent global stocks. If Bitcoin's a winner, MicroStrategy be a winner. The other thing I do want to stress as well is premium or Satoshi accretion per share. Same deal since the very beginning. Last week, they added 1.25% more Satoshis to every share you have. It's now selling at a discount, I think 12, 14% discount to their Bitcoin bag. You know, they're not going to be liquidated. They will not get a margin call unless the price falls to, Bitcoin price falls to $10,000 or $15,000, which is highly unlikely. Everything's possible, but highly unlikely. We just have to watch the NAV premium, and we have to wait for the FUD storm to die. This too shall pass. And if I had to play one, I would go. It's going to sound dodgy, but when you look, if you just break MicroStrategy down to the simple part, that is Satoshi per share accretion over time. This year, there'll be about 25, 26%. So if you had a share at the beginning of the year, now you have 25, 26% more Satoshis per share than you did at the beginning of the year. But that will continue over time. That's what you pay a NAV premium for. Right now, it's at a credit to NAV premium. Therefore, something is wrong with the markets. The pricing is not working. And last bear market, I loaded up when the price was 160 before the split, about $16. And that ended up being an incredible trade. We're not back at those levels just yet, but we're getting pretty close. And therefore, Doc Intern, not financial advice. Deep in the money leaps out to January or June 2028, I would go with MicroStrategy because they have the financial jujitsu. They have the ability to increase Satoshis per share. IBIT does not. That's the difference. But I do know everybody hates Michael Saylor because he pulled a rabbit out of a hat that nobody saw. And people who are successful are hated. Think Elon Musk. Think Michael Saylor. It's just the way of the world. Anyway, I love the question. A big thank you for Super Sticker, Sir Winston, Swiss Guy Ritchie. I love Guy Ritchie, great movies. And we have a Swiss one. IQE Labs, Martello, Forrest, Buckhorn, Adam, Gamble Bro, Joe Biden's Daycare, Signal 103, DBF 430, and Anjo. Remember, leverage kills. Build a bag. Let it compound. Sit back. Sit on your hands. Don't play with too much leverage at all, my friends. Thank you, everybody, for coming. See you all tomorrow morning. Bitcoin up over $3,000 today, up nearly $8,000 from the bottom. Be patient. Thanks all for coming. I hope my voice is just about to fail, which is great. Right on time. Now I lost the window where I can control this thing. There it is. Thank you again for coming, everybody. Bye-bye.